Good morning. Happy Thursday. Let's see, make sure everything is okay. That looks good. That looks good. What? All right. I think we're good. Are we good? Let me look. Moment of truth. It's all about Facebook, guys. Does Facebook work? Are we on Facebook? If you're on Facebook, let me know. Let's see. All right, we're good. Facebook's good. LinkedIn's never a problem. All right, let's roll. Welcome. Okay. Welcome. Happy Thursday. Happy all the things. Missed you guys last week. Not really, because I'm a family vacation, so I didn't really have time to miss you guys, but glad to be back. So yeah, let's jump in. Today we're talking about hiring your kids, right? Quick, the normal quick intro. If you are new here and you do not know who I am Bree Beers. I am Bree Beers and Associates. We're a tax firm in Denver, Colorado. We have clients across the country. We do tax prep for small businesses and individuals, but also we do tax advising, tax planning, stuff like that. Who am I? I am a CPA, a certified tax coach, an advanced tax strategist, a fractional CFO. I have all these titles of things that certifications I've earned either by passing tests or taking classes. But where I really hang my hat and want to share with you guys is the 20 years of accounting experience that I have, 20 plus at this point. I have 12 tax seasons under my belt. I have 7 years as an entrepreneur. And for probably the last 6, I'd say, I have been really trying to learn the tax code more than just tax preparation, right? Trying to figure out how the tax code's used for tax planning, tax strategy, how it's used to save money, right? And so my mission really is to help the middle working class, right? All of us that are here in this group that watch this weekly. So I want to help you guys use tax planning to cut your tax bill and therefore take that money that you're saving and use those dollars to start building wealth. Right? I want you to save taxes so you can build wealth. Invest in yourselves, invest in your business, in your kids, in your retirement, whatever that looks like. All right. And I believe that tax savings and tax planning is the first step toward building wealth. All right. Because it's a way for you to get more cash in your pocket without actually making more money. All right. So today we're talking about benefits of hiring your kids. So we're going to start with why. Why is this something that people talk about? Why is it? I mean, I don't know about you. It might just be because I'm an accountant, but it ends up all over my social media feeds. And it's hiring kids. And to me, a lot of it feels a little sleazy. A lot like at least what comes across my feed. Everyone's feed is different, but a lot of the stuff that comes across my feed makes it seem almost like this is a dirty secret that the IRS doesn't want you to know, right? The great thing about this is it's actually a code that the IRS built, all right? It's not a secret. It's something the IRS built and it is built into the IRS code, all right? So the benefits of hiring kids, you start by how, right? So it lowers your taxable income, all right? By being able to hire your kids, and in fact, hiring any of your family members is going to be a business deduction, right? Whether you have kids that are going to fall under this special loophole that we're going to talk about, where you save even more money essentially over hiring, other employees, but any family members that you have a position for in your business that can work for you and help you, you can hire them. All right. And it's a business deduction. Your mom, your dad, your uncle, your cousin, your niece, your nephew, your brother, your sister, it doesn't matter. You can hire anyone just like you would hire any other employee, that isn't related to you. All right. There are additional benefits to hiring your kids under the age of 18 that we will talk about. All right. But hiring any family member is going to be a business deduction, right? You're going to pay them a wage. You're going to file a W-2 for them. It's going to be a reduction to your taxable income from your business. All right. Hiring your kids under the age of 18 adds an additional tax benefit. So where this comes into play is that your dependents, if they are under the age of 18, so 17 or under, and they work for you, they are also exempt from payroll taxes. All right. So what does that mean to you as a business owner? When you hire an employee who is not your kid, all right, anyone else, okay, you hire an employee, they're a W-2 wage employee, whether it's salaried or hourly, it doesn't matter, but you're paying them. My screen just moved. You're paying them a W-2 wage as an employee, right? And with that, right, they're responsible for paying income tax and state income tax. But you, and as the employer and the employee, you guys split the payroll taxes. All right. That is your FICA, your Social Security, your unemployment, all of those payroll taxes. You are responsible for half as the employer. The other half comes out of your employee's pay. All right. And that is just under, we're going to call it 16%. There's FICA, Social Security. Those are your federal payroll taxes. Your states are going to have unemployment. Your state might not have other taxes that have to be paid, but we're going to, for the sake of ease, we're going to just call it 17 or 16%. All right. So half of that, 8% of that, you're responsible for as an employee. All right. The other 8%-ish, 7.2 is the right answer, comes out of your employee's paycheck. All right. Well, when you hire your kids under the age of 18, they're exempt from those taxes. All right. So when you're paying them a $1,000 paycheck for whatever their services are, not only are they getting that full $1,000 because they're not having to pay their portion of employee payroll taxes, you're not having to pay the additional 8% on top of that. All right. So the $1,000 paycheck to your kids is simply that, it's $1,000. Whereas if you paid Joe Schmo $1,000, you'd be paying those payroll taxes on top of it. All right. So the IRS has created this loophole that says if you hire your children in your business, they're under the age of 18, so 17 and under. All right. They're legitimately working for your business. They have jobs that they're actually performing. You're paying them a reasonable wage. We'll talk about all these requirements in a second. What they're saying is, yeah, you can pay them. And we are not going to require you or them to pay payroll taxes. All right. So that's the additional benefit of hiring your kids. Okay. So they're exempt from payroll taxes. The other thing is you can pay your kids up to the annual standard deduction amount without triggering taxable income to them, therefore without triggering a tax return required by them. For 2024, that standard deduction is $14,600. So what that's saying is I can pay my child up to $14,600 for working in my business without them having to file a tax return as well. All right. If I have a kid and I'm paying them a reasonable wage, paying them for legitimate task, and I pay them more than that, that's fine. That is still exempt from the payroll tax part that we talked about, but they're going to have to then file a tax return and pay a small amount of tax. All right. But that is also a tax strategy. If your kid is actually working in your business, right, doing projects for you, doing tasks for you, even if you pay them over the standard deduction and they have to file a tax return and they have to pay tax, they're likely going to be in a lower tax bracket than you, right? They're probably going to be in the 10% tax bracket. So paying 10% tax on that money over $14,600, whereas you're probably in the 24, maybe even higher tax bracket. So you can save some taxes, even if they're making more than the $14,600. But we talk about that standard deduction because that's the amount that you can pay them up to without them having to file a tax return. All right. So there are additional benefits to hiring your kids, right? We talk about the tax piece. That's what we're here for, right? We're here to talk about tax strategies. But there's so many other benefits to hiring your kids in your business, all right, that we don't necessarily hear about when we're seeing these Facebook ads and these Instagram ads, right? And hiring kids, it teaches them some responsibility, right? It gives them a connection to your business. I don't know about you, but like my kids grew up seeing me, spend hours in this business, not really knowing what I do because I'm an accountant. They're like, okay, what is that? And then once they're working in your business, they're not necessarily looking over your shoulder, but maybe they're doing your social media. So they're getting an idea of what you actually do as a real estate agent or as an Etsy store owner. Maybe they are scanning files for you. Maybe it doesn't matter what they're doing. The point is they're getting a connection to your business, right? And getting that connection with what you're spending all your time, so much time and effort on of your life. All right. Another thing is most of our clients who hire their kids open up a Roth IRA account for them and contribute a portion of their earnings to that Roth account. All right. I think that $7,000. So up to $7,000 of what they earn can be put into a Roth. We can talk all about Roths, and I probably will in a future training, because Roth IRAs don't give you a tax benefit now, but they have so many other positives and other plus sides to it that they're awesome. So with your kid, you have to have earned income to contribute to a Roth. Anybody, whether it's a kid or an adult, you have to have earned income. By your kids working in your business, now they have earned income. All right, so they can now contribute to a Roth. I love Roths. Before I advise my clients to contribute to their kids' Roth, if possible, before they contribute to, say, an educational plan. Because the great thing about a Roth is that, yes, any interest that you grow, that you accrue throughout the life of having that Roth, you don't want to take that out till your retirement age. But the principal that you put in is yours to take if you want it. So Roths make a great alternative to college savings because they're going to grow tax-free. But the principal is theirs to take out at any time, as long as you've had the account for 5 years. Okay. And the other piece of that is, sure, you allocate a portion of their earnings to their Roth, but then the other part can start paying for extracurricular activities. If you're with, or like other items. So if you've been with me, a lot of what we talk about is how do we shift those post-tax dollars that we pay, that we're paying out into pre-tax dollars. And what that involves is taking dollars that come out of our personal funds and how can we shift them to the business. All right. And this is kind of a way to do that to an extent. So what I'm saying here is, for example, your kids work for you, they're earning money, they have this money in this account, and I'm going to let them spend a certain amount of it, right? I'm going to allocate however a percentage. You do you, each parent's different, but I'll say, you could 50% is yours to spend. All right. We're going to put a certain percentage into savings. And then this other percentage is going to go toward your club volleyball dues, toward your senior trip travels, toward, what else do kids do? I have an athlete and I have a kid who plays like esports. But where I'm going with that is those dollars that used to pay for club dues, club trips, senior trips, sports, you name it. All right. That used to come out of your personal account as pre-tax dollars can now come out of your kids' account. That essentially came out of your business and became a deduction. Okay. You cannot use your kids' earnings to buy their food or pay your mortgage. It can't be like life expenses, but we all know that above and beyond that, kids are pricey. So that's a way to do that shift of spending post-tax dollars into pre-tax dollars. All right. So that's why you want to hire your kids in your business. Now, if you've been here before, we talk about, okay, how do I do that? Right. And there's 3 steps. You have to qualify, you have to document, and you have to report. Okay. So qualifying for this is pretty easy. You have to have a business and you have to have kids. Again, you can hire anyone who's not your kid. It's a business deduction. But if it's your kid under the age of 18, you get that additional benefit of not having to pay payroll tax. All right. So you have to have a business. You have to have some kids. You've got to follow the rules. We'll get to those rules and documentation. This is the biggest hurdle that keeps people from hiring their kids. I know this is the reason it took me too long to hire my kids in my business. All right. So another qualification, if you have an S Corp or a C Corp, you're not allowed to pay your kids and get that payroll or that payroll loophole, right? So what you have to do if you have a corporation is set up a family management company. Okay. Not hard. We'll get to the documentation in a second because that's the part, like I said, that's scary. But in terms of qualification, follow the rules. You have to have a business. What's also cool, guys, if you have grandkids or nieces and nephews, there is a potential workaround around that payroll tax if your kids' parents are willing to get involved. That's something, if you work with us, we'll talk to you about. Or if you have an accountant, talk to them about that. And corporations have to set up a management company. Qualification. So for wages, for that extra piece of wages being exempt from payroll tax, the FICA, the FUTA, the SUTA, the children being hired have to be a dependent of the business owner. So that's you. Okay. There are some exceptions, but not ones that I'm going to give on this general training. They have to be they have to be a tenant under the age of 18. All right. We do have clients and we have clients that do hire kids under the age of 7 for different things, but 7 is the lowest age that we've seen proven in court. All right. So 7 to 17 is that ripe age that, like, if you have kids between the ages of 7 and 17, you should be hiring them. They should be working in your business. Like, this is a no-brainer. All right. Less than 7, you need to talk to your tax professional, because there are ways to get around that. There are ways to take advantage of this. It's just a little tougher. All right. They've got to be able to perform age-appropriate tasks. All right. So you can't hire your 4-year-old to manage your social media. Okay. Like, it has to be age-appropriate tasks. And they have to be paid at a reasonable salary. All right. You can't pay your 4-year-old, $80 an hour to shred papers. Okay. It has to be reasonable. And again, your kids have to be hired by a non-corporation. So if you're a Schedule C business or a C Corp, you have to create that family management company in order to flow through and take advantage of that. All right, so that's qualification. Documentation. Again, this is where it's the setup documentation where we get caught up and where clients and taxpayers tend to be like, this is too much. We are not doing this. All right. The ongoing documentation and requirements, not hard at all. Okay. And we'll get to both. So first of all, it's a setup. All right. So what do you have to do? So you said, yes, I have kids. I want them working in my business. I want to take advantage of this. So what do you have to do? So if you're at S Corp or C Corp, you've got to create that family management company. All right. And there's steps to that we would do if we work with you, or if you have a tax professional, they can do for you. All right. All businesses, there is a list of setup documentation that you have to put into place. All right. And I'm going to tell you what that is. I do not want it to scare you off, because what I want you to do is realize that, okay, that is a lot. It's probably too much for me to do. I need options. All right. I either need to talk to my tax professional and see if they can help me with this, or if my tax professional doesn't, maybe I need to set up a consultation free to see if they can help me with this. Because in order to take advantage of this, you have to have an employee. You should have an employee. It's all about documentation. All right. Because if you ever get audited, right, that's if you're new here, we talk about audit proofing our tax returns. And especially when you're doing tax planning and tax strategizing, the biggest piece is making sure you have that documentation to support your deductions, to support your expenses should you ever get audited. Okay. So for every business who hires their kids, you should have an employment agreement in place. You have to have a federal tax ID if you have to do that family management company, right? State tax ID numbers, because you have to set up payroll. Okay. So you have to have a federal ID, a state tax ID. You need to get W-4s for each of your kids. You want to open personal bank accounts for each of your kids. You got to get your kids set up on payroll to run it. If you already have payroll you're running for other clients, great. You can add your kids to it. If not, you still have to be able to run payroll. If you're going to take advantage of the Roth, you want to set up that Roth account. And you want to make sure that all your payroll expenses are reported properly on your business P&L. Okay. So lots, like I said, sounds daunting when it comes to the setup piece, but it's really, what's nice is if you work with us, we have all the templates, we have everything to walk you through this and do most of it for you, honestly. Okay. So the ongoing piece. So yeah, you've gotten through the hard part. You've done the setup documentation, that part behind you. Great. So what do you have to do ongoing? All right. In order to have to stay audit proof and having your kids work for you, you want to make sure you have a work log for what your kids are actually doing in the business. You want to have their pay rate in that engagement or in that employment contract. And if that changes, you want to keep that updated. Right. And the most important thing, you got to run a regular payroll for your kids. Okay. You can't just at the end of the year go, oh yeah, 14,600, here you go. You have to have these in place so that you're showing that, yes, this is legitimate. Okay. So the ongoing documentation, not super hard, make updates to the setup documentation as needed and run payroll. All right. Reporting. because you have these employees, you need to run W-2s for them, okay, at year end. If you're required, so state by state, okay, some require you to still have like the state payroll account set up and file zeros for your kids as exempt. Most states, at least the ones I've worked with, say if your kids are exempt, no need to set it up. But that's something you need to, in the setup process, you'll figure out, so that if you have to file those ongoing payroll reports, you'll know which ones need to be filed each year, right? So then this payroll expense, the reporting piece, it goes on your Schedule C, right? If you have a P&L, right? It just gets, if you're a sole proprietor, or you're a Schedule C business, right? Schedule C business, your wages are simply an expense to your business. Super simple, right? If you have to set up a family management company because you're an S Corp, there's a little bit more to it. Okay, you have your S Corp paying your family management company, your family management company receiving that money and then paying it out to your employees, essentially zeroing out your Schedule C. If you have an S Corp, but you still got to make sure you report it properly. All right. And then if your kids make more than the standard deduction, you will have to file a 1040 for your kids as well. All right. So that's the reporting piece. So this is one of our tax strategies that seems overwhelming, seems daunting because it requires a lot of setup, a lot of documentation, but it's one of the most lucrative. Okay. It has some of the greatest benefits beyond tax savings, right? We talked about teaching kids responsibility, giving them a feel of what your business looks like, setting up potential retirement account, or savings accounts for them, Roth accounts. All right. And the biggest part, or like another big piece, is allocating those post-tax savings, right? We talk about extracurricular activities, now using pre-tax dollars for those expenses. All right. So yes, it's a lot. It seems like a lot of work, but it's worth it. You're saving so much money. The average kid, like if you pay your kid, right, $14,600, let me do the math real quick. I've done this math 1,000 times. You think I'd have it memorized, but $14,600. And even if you're, let's say the 22%, you're saving $3,000, all right, in taxes by hiring one kid and paying them that deduction, standard deduction amount, okay? So some of the big things, and I touched on it, but I want to reiterate on, is making sure that your kids are actually doing work for your business and making sure you're documenting what they're doing so that if you ever do get audited, you've got your ducks in a row, and making sure what you're paying them is reasonable. One little tip I want to give here, hourly rates, harder to get to that $14,600, right, per year, rather than project-based. So you're allowed, if you give me an example, let's say my daughter is doing my social media management, right? And she's doing the post, whatever she's doing, okay, I can bill, like I can say, okay, like per project, I'm going to pay you. Okay, so for each month, if you're going to do this many social media posts, you're going to put this many captions, whatever they're doing. And each month for you doing that, I'm going to give you a set fee. All right. So you're allowed to project-based pay your employees, any of your employees. And you're able to kind of increase their pay rate a little bit more by that, because then they're not getting paid hourly. But it's up to you. It's up to you and what your business looks like and what your kids are actually doing in your business. All right. If that is something that you're like, yes, sign me up, I need to do this, I need to get this set up for 2025. And is there a way for me to actually, do this for 2024? Yes. Talk to us. We, in the link somewhere, there is a link to chat with us for a free tax analysis. All right. It's a quick 15-minute call where we just said, okay, what do you got? What are you trying to do? What does your tax picture look like? We tell you if we can help you for 2024. We build you an analysis. We meet with you a week to 2 weeks later, depending on how long it took you to get us your information. And we show you what we can actually save you. So pretty easy. If you're interested, the link is in the comments or in the caption somewhere. So next week, that's it for this week. So next week, we're going to talk about the Augusta rule. Some may have heard it called the master's rule. But this is where you can rent, if you own your house, you can rent it to your business. And we'll talk about that next week. All right. Thanks, guys. Missed you last week. Glad to be back. And we will see you next Thursday. Bye.